Hello again, everyone. Welcome back. In this technical analysis of the stock market video, we're going to take a look at the S&P 500 today, take a look at a few of the indicators, and then check in on Apple and Alibaba. Okay, so the side-by-side view, the Dow Industrials were up 481 points this last week, the S&P 500 up 110, and the NASDAQ 100 was up 549. Now, the Dow closed above the prior week high, so that's a nice little positive in here. But the S&P was even stronger, closing above the trading range of the prior 2 weeks. Okay, so we had lower highs, and then all of a sudden, not only do we have a higher high, but then we close above that trading range. Same thing over here, only even stronger on the NASDAQ 100. The trend continues to be very strong, as is the trend right here. All three of these are trending very nicely to the upside. And this closed above the trading range of the prior 3 weeks in here. Let's go and take a look at the S&P 500. So here's that weekly view I was just talking about. On Friday, it was up 811. A little bit of volatility that was in there. Look how we had an outside, slightly up day in here, but it's red because we closed below where we opened, okay? So that's the way these candles are on my chart. If you close above where you opened, it's a white candle. If you close below where you opened, it's a red candle. Okay, so that is the picture we've got. I want to take a look at the Elliott wave count. Now, we have flipped to the alternate count in here. And we have flipped to the alternate count. I'm going to get rid of this level for now. We flipped to the alternate count because of the strength of what we're seeing in some of the indicators, several of the indicators. And it just looks to me like we are in a short-term move to the upside. And it looks to me like it's a last hurrah. And I'm going to talk about that in a minute. But the count that I'm working off now that I like the best is that, yes, we had that big move down from January 22 to October, but I'm counting it as a 3-wave move for primary wave A, and that I'm looking for this to be a 3-wave move back up, a zigzag move back up for wave B, okay? And when this C wave ends, which I think we are in that 5th wave right now, then we're going to get the C wave down here, this primary wave C, this move right here. So what does that look like? Here's what I'm talking about. Here's what occurred back between 2018 to 2020. It also happened in 2008 and 2009, but 2018 to 2020, this A, B, C flat. Now this was an expanded flat. Why? Because the B wave went beyond the beginning of wave A, and then the C wave went beyond the end of wave A. Okay, so that's what we call an expanded flat in here in Elliott wave terminology. Okay, so you can see that not only did the B wave go back up to the beginning of wave A, it went beyond it in here. But then look how strong and vicious these C waves can be. Just like 2007 to 2009 was also a C wave. Okay, well, after we complete this B wave, I believe that's what's coming, only on a bigger scale than what I just talked about here. We're going to be talking about a much bigger degree of wave count in terms of what's unfolding in terms of a larger bear market, okay? But short term, I think we're in an upthrust. I think we're looking at a little bit higher push into here. It reminds me a lot of 2007, and I'm kind of jumping ahead, but we'll get to that in a minute. Let's take a look over here at the daily. And here's how that looks. And this dashed line up here, what is that? What I'm doing with the dashed line, that is where the B wave will retrace 90% of the A wave. So for this to be a flat, that has to happen. This has to push above this level, which is 46.86, let's say. 46.86. We push to 46.86 and higher, then I'm definitely counting this as a B wave. If we roll over, break down, and fail to get to that level, I'm going to be defaulting back to the count that we were working, which is this count, which is 5-wave, zigzag, 3-wave, complex WXY, and then breaking down. But right now, this is the primary, okay? So this is what we're watching. We're watching for this final 5-wave move to play out. Is it going to be a classic impulse wave, or is it going to be an ending diagonal pattern for this little 5th wave move in here? We'll see. All right, let's go take a look at the SPY, and I'll just show you. We got the same thing here on the SPY. Here's what we're looking at. And if I look at this picture here, this is your classic, just the, what I call the moving average view, because this is where I've got the moving averages, a couple more indicators. So here's where the breadth thrust occurred. I look at the advancing and declining issues on the New York Stock Exchange, and we track that every day, okay? So we had a down thrust that occurred right here on August 2nd. Got the follow through, came down nicely, but it didn't continue. All of a sudden, we started noticing some things going on, and we got this up thrust that occurred on the 29th. And when I saw this happening and everything else I started seeing in terms of other indicators, that's when I said, okay, I'd been warning the members that we could be flipping to the alternate, from the primary to the alternate account. And when this happened here, that's when I said, okay, we're going to flip. Now, when I look back in this same year, here's what happened back in February. A down thrust followed by an up thrust. And then we got a tremendous follow through. Do I think we're going to get this? No, I don't think so. But right now, I'm just looking to ride an uptrend. We'll see how far it wants to take us. Now, I mentioned something about September of 2007. Let's go take a look. So let me shrink this down a little bit. And then we'll do this. And then we're going to go back to 2007 right here. And I should have this in here. Here we go. So a couple of interesting things. Look how the market peaked in July. July 17th. Our market peaked, I think it was July 24th. Then we got the sell-off, okay? And then now here in 2007, we got an upthrust that occurred on August 24th. Our upthrust just occurred on August 29th. And then the market continued to rally until it reached that all-time high, or at that moment, that was the high, okay, at that time, on October 11th. And then that's when we started the major move to the downside that didn't stop until March of 2009. Okay, so right here is the peak. Now, what did the Fed do? They cut interest rates right here the week of September 16th. I wouldn't be surprised if it was this day right here. So they, up until this point, they had been raising interest rates. Then they cut interest rates here, okay? And then the market peaked and then rolled over and came down. Now, I talk about these interest rate hikes, and I talk about the timing of different things like that in one of my latest posts that I have on the website, a blog post. So if you want to see some more of that kind of background, I've got that out there with several pictures, several snapshots at different times in the market over the last 25 years. Okay, so this is really, really interesting. Now, the other thing that's going on is what's happening with like some of the indicators in here, like the VIX, the put to call ratio. And let me pull that put to call ratio up. So here's what's been happening recently. We're getting some very extreme sentiment in here in the option pits. A lot of put buying, okay? Very extreme. And then this is what I call a pivot point, where the 10-day reading, this is the actual daily reading, this is the 10-day reading. It comes up, it hits a peak, and then it starts to back down. So the peak occurred on August 30th. Well, that was a couple of days, actually the next day after the upthrust. So it's almost like the peak in sentiment, bearish sentiment occurred here, kind of like when it kind of did back here on July 20th in the opposite direction. So right here, where's July 20th? Right here is where the sentiment in the option pits peaked in terms of bullish sentiment, okay? And then we got the down thrust that occurred right here on August 2nd. So it's going to be really interesting to see how much further of a move do we get in here. I have a feeling it's going to last at least to mid-September, if not to the end of September. We'll see what happens. Again, I'm looking for 5 waves to finish out the wave count that I just talked about right here, okay? Let's take a look at a couple of other indicators. The VIX. Talk about, confirming the move of the market going up. The VIX is just collapsing. I mean, it was down 48 cents on Friday. It's just going straight through the floor. Second lowest reading of the year. But on a weekly basis, this is the lowest weekly close since January of 2020. So pretty dramatic move in here to the downside on the VIX. Pretty much confirming and staying in sync with what's happening there. Now, the high yield bond fund, HYG, I wasn't going to talk about it, but man, we're getting some tremendous compression that's developing here on the daily, weekly view, like a big symmetrical triangle. It's going to be interesting to see which way does it break. Well, if the market continues rallying, this should break to the upside in terms of saying risk on. And we'll see. See what happens. I think this next week is going to be pretty interesting. Let me get rid of this. We talked about the put to call. We talked about the VIX, HYG, the percent of stocks above their 200-day moving average. Okay, we were coming down. We had flipped to the downside here at the beginning of August, right in sync with the down thrust and everything else we were seeing. And then now all of a sudden we're flipping, and it looks like we're about to flip to the upside. Now, what do I mean by flip? I'm talking about when the moving average is flipped to the upside or downside, moving average cross, okay? And now we've got this close above the 21 day moving average in here. We're sitting at 55.7% of stocks in the S&P are above their 200-day moving average. Similar kind of thing is happening on the percent of stocks above their 50-day moving average. Okay, we haven't flipped on either one yet, but it looks like we're getting very close. Okay, so that's it on the indicators. Let's check in and take a look at Apple and Alibaba. Okay, here's the weekly view of Apple. Had a big move this last week, up $10.85, and here we are back above that prior all-time high that occurred in January of 22. We got above it, couldn't hold it, broke down below it. Now we snap back up. It's going to be interesting to see, does it continue to push like what I'm looking for in the market? Look what it did. It came up and almost completely closed this gap right in here. This gap was between 187.38 and 190.69, the high on Friday, 189.92. But these two little doji candles for Thursday and Friday kind of gives you pause, and it's been up 6 days in a row. And the volume on Friday was the lowest of the last 4 days. It might have actually been lower. Let me see about this. 42.7, 45.8 now. This was more than over here on Monday. But this was the lowest of the last 4 days in this push right here. So we may be getting ready to pull back a little bit here on Apple, but interesting move. Let's take a look at Alibaba. Talk about interesting. There's a lot of negative noise coming out of China right now. A lot of negative news. And then look what's happening with Alibaba. Is this thing getting ready to bottom? I mean, it kind of looks like a large head and shoulders pattern. Now, this is a weekly pattern to me, but here's what it looks like. I mean, it looks, And the interesting thing too is when you look at this, notice how on the left shoulder here, the symmetry on the left shoulder, and you got the head. The other thing is, look at the volume on the capitulation of the left shoulder, what looks like lesser volume, and then even lesser volume over here on the right shoulder, which is a classic head and shoulders type bottoming pattern. Now, the other thing I noticed is, even in the right shoulder, it looks like we might have a little head and shoulders pattern in the right shoulder that could be playing out. So Alibaba looks really interesting right now. So we'll see what happens. We'll see if we can break above this, you know, all of this price action, which really, let me look at this, where we're talking about. This is talking about the trading since February. So for the last, what, 5 months, this is what this has been doing, okay? And the daily view, let's just see. Yeah, it's been trying to, had a nice move this last week. How much was it up this last week? I didn't even look at that. Up $5.19, 2 weeks in a row. So I think that's very, very interesting. So we'll see what happens with that. All right, that's it for this video. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a daily basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. Enjoy the long weekend, and we'll talk to you again on the next video.